This is Tim Brown with Security National Mortgage. Today, we're talking a little about rates and where they're heading. I know that's probably most people's primary concern. The good news from the rate front is that rates, after taking a long trend higher over the last 2 weeks, we've seen a dip today. It's partly due to some of the things that happened in the UK. But the rates are nearing 7% at the par rate, which is the highest we've had in some time. We expect them to head lower, but it's one of those things where news is tending to push the rates in whatever direction that investors are feeling, whether that be higher or lower. But one of the reasons that we want to bring up a program that I think has a broad appeal is because of the volatility rates, and the program that I think makes the most sense for buyers in these circumstances and these times is our 90-day lock and shop program, which basically means that you lock a loan for 90 days. You don't even have to have a property identified. And then during that 90 days, if rates, or hopefully when rates fall, you can reduce your rate one time during that 90-day window. So, for example, if you lock in today at, let's say, 6.75%, and in 2 weeks the rate is at 6.25%, we would reduce the rate to the lower rate, thereby giving you that discount. If we lock on a normal interest rate lock, those kinds of float downs are not available. But we realize the market is tight right now from an interest rate standpoint, and we want to give folks the opportunity to save during that process. So this is our recommendation to buyers. You don't have to do that, but I think it's the most logical thing. The other way that we talk to people, when we talk to people about reducing your payment, we have a 1-year buy down. It's called a 1-0 buy down, which basically means that your rate is reduced by 1% for the first year. So as in the same example, if we're at 6.75%, that your first year rate would be 5.75, thereby saving you, depending on the size of the loan, $200 to $300 a month in interest. At the end of the 12 months, it goes back up to what we call the note rate, in this case 6.75, and it stays at that for the rest of the term. The good news with this is typically a buy down of this kind it costs the borrower money. In the interest of trying to get folks into homes and giving them that first year of payment savings, we're covering the cost of that 1-year buy down. So that means you get basically the same program with the first year at a lower rate at no cost to you. So I hope that I have the opportunity to assist you. If you want to reach out to me directly, you can do so at 678-467-9959 or tim.brown at snmc.com. Don't forget to contact Veronica Barish, an agent that I've worked with for almost 20 years. Thanks, and have a good rest of your day.